Hello traders, welcome back to my channel. In this video I'll be sharing with you a volatility 75 strategy, a boom and crash strategy, volatility indices strategy, which has to do with trend following. So I'll share with you very nice trade setups on how you can analyze and catch very good moves in the market while trading with the trend of the market, right? So mind you can develop a strategy from this and make a lot of profit. So it doesn't matter the market you're trading, you can equally use it in the forex market. So you want to watch this video to the end so that you can grasp this my secret entry technique in which I've been able to win trades most often, and I'm currently having running signals in my Telegram channel right now. All right. Okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX 75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. First of all, you need to understand what a trending market is. So when they say a market is trending, it means the market is having a bias. It is either going up or down. All right. And if you see a market structure which is performing or moving like this is not a trending market, right? So you need to understand that a trending market should be creating in there an uptrend with higher highs and higher lows like this, or a downtrend. So this is what we call an uptrending market. Okay, and then we have what we call a downtrending market, right? So in one point in time, the market can be uptrending and it will turn to a downtrending market, and it can be downtrending and turn to an uptrending market. So price will continue to create highs or continue to be called an uptrend if price continue creating new highs and does not come back to break through the previous low. What do I mean? If price comes back like in this situation and breaks through this previous low in this situation, we have this to be a temporary change in trend. There are things that are going to confirm that the trend of the market has changed. You can see that here we had higher highs, higher highs, higher highs, higher highs, but price did not come back to break this previous low. It didn't come back to break this. It only came back to break this. So once it breaks, now there are possibilities that the trend of the market can possibly be changing. So we are building our strategy based on this, and when it changed now to a downtrend, it start moving down, creating what we call impulsive moves and pullbacks, right? This is an impulsive move, this is a pullback, impulsive move and a pullback, right? So we want to be catching those impulsive moves when price pulls back. All right, now let's go to live charts. All right, now this is a market structure. Let's look at the bigger time frame. Let's go to the H1 time frame. This is an uptrending market structure, right? This was made for demonstration in the VIP. All right, let me just share you guys what I mean here. Now you can see here, looking at our left hand side, we have a downtrending market, right? You can see price creating what lower lows and lower highs, right? Lower lows and lower highs, lower lows and lower highs. Okay, now you can see now that when price created this lower low, what happened? It came and broke through the previous high. So if you look at it very well, zoomed out, you are going to see that this was the previous high that was created at that point in time, right? Now the market did not continue creating further lows, but it came and broke through the previous high. And once it broke through the previous high, what happened? Price now started, it just pulled back and then started creating what? Higher highs. Okay, it creates higher highs. Remove this an impulsive move. Right now you see that once price create an impulsive move like this, okay, let's just clear this out. Okay, so you see that when price create this is called an impulsive move. It pulls back. We already have this to be a pullback, and once price pull back, it is consolidating to take the next impulsive move, because most people that took their buy trades here, they are probably, or here they are probably taking their profit. So price is consolidating, so price will be consolidating so that more people can enter the trade, and when they enter, the next impulsive move, now you see that price move and then pulls back for many people to enter, and then it jumps again. Now I went to the 15 minutes time frame. When I see a pullback, let me share with you guys my entry technique. Now once price move up like this, right, it start pulling back, what I will do is I will identify many things that can put many things in consideration. So I can either identify, mark out my previous low like this. I wait for price to clear liquidity here, and then I'll be entering at the strong bullish candle that will be formed, and I will be taking this high. I actually took this trade last night, right? And then when price move up, I can wait for price to pull back, identify this liquidity zone, this, because at this time we have this to be a support zone, right? As price is consolidating, now there are many people will be buying, and then their stop losses will be here, or price will actually come and then grab. When it close with that bullish move, we go long. In this situation, you see that price will most likely move. Or I can identify to be a chart pattern, right? I can just draw it out to be chart pattern like that. Okay, remember we have identified our possibility in the bigger time frame, right? So now in the smaller time frame, we want to look for confirmation. Now that price has moved as an impulsive move and it is consolidating, what do we look to take as our immediate entry, right? So this is our immediate entry. You can look for what breakout. You wait like this is a symmetrical triangle. Now you see that when price consolidates within this triangle here, what happened? It can look you and breaks out, we can go long at this breakout as this candle stay close there, and then we have our stop loss below there, and then we are targeting these previous highs, targeting higher zones, and we see that we are going to make money. And price move, consolidate again, we look for our next entry possibility, we enter again. Sometimes you can use trend lines. Price sometimes can pull back and then get support at trend lines, and then you should catch the move. So the initial point is identifying the phase of the market in the bigger time frame. You'll see if the phase is in an impulsive of a pullback phase. You don't want to be entering at the impulsive phase. Like now price is already moving almost in the middle of this impulsive phase. It's not nice jumping in here. You can only wait for price to pull back. Sometimes you can still use your trend lines. You can connect like that. There are times where price will pull back and find dynamic support or resistance in a trend line, right? So you can only wait for price to pull back at the zone here, and then maybe it can move like that and then pull back. Then you look to entering here and then catching the next move. You can equally use your demand and supply. Okay, you can still use that concept, and then you identify this candlestick. In case price comes back and pulls back to that zone, you wait for price, you moves like that, comes back, and then you will entering at the next impulsive move, combining your trend line and your demand zone, and then you're catching the next move. That is as simple as it is, guys. This applies to all markets, because you see that now as the market is trending, it's going to most probably continue trending until the trend of the market change. So you can catch those impulsive moves by looking for what these measure moves, and then looking for pullbacks. Then you drop to smaller time frames, and then you look for what chart patterns when price have already pulled back. You can look for a chart pattern, you can look for liquidity, you can look for maybe trend line entry, demand and supply, and all of that. And you see that you most often catch these big moves. Now you can see how comfortable I am catching moves like this. You can see prices moving just as I predicted, all right, just because of this analysis, guys. So this is very powerful. So we have a similar scenario here. You can see price move, it gets impulse move, pull back, pull back, pull back, and we enter. Now you can wait for price to pull back to this zone here, right? Because here I actually went to the bigger time frame and I identified that what price actually created high highs, all right. But here we have the previous low that has been broken. You can see here this is the low that led to what this high. This low led to this high here, but now price has come and broken through. Now price has pulling and it's now creating what impulsive moves and then pullbacks to a downside, right? So you can see now that we can now start looking for sales. As price pulls back, we enter. Price comes, pull back, we enter. Now see now that if price pulls back to this zone here, which is also like a trend line zone, and then with this confirmation of break, we can see sell, and that will be a high winning probability trade. So that is it, guys. Thank you so much for watching. If you found the video helpful, don't forget to subscribe to the channel if you are new by hitting on that subscribe button and notification bell, and also make sure that you give me a thumbs up. Make sure that you backtest any strategy that you learn online. Make sure that you backtest it, go and trade it on a demo account, master it first before you take it to your live account. So